Brent, good to see you. Today we are talking through people's biggest retirement regrets and how to avoid them. According to a recent report from Consumer Affairs, 60% of seniors had regrets about how they prepared or didn't for retirement. And among the regrets, 63% wish they had planned their investments to provide automatic income. How do we avoid that mistake?
One of the top things we hear when we meet with somebody is, man, I wish I would have come to you in my early 50s instead of my 60s. And that's because life gets busy, kids are still in the house, they're still working and all that stuff. And so by the time they get to us, they have these regrets. But the good news is, a lot of times we can still put things into place that they thought the ship had sailed on. So guaranteed income, people usually think annuities. We do a lot of those, and rates are tied to interest rates. And so it is actually a great time to be talking about this stuff. It's very favorable. So even though there's some regrets there, doesn't mean the ship has sailed, and we should still talk about it.
Right. It's not too late. Good point. Another 85% wish they had built their portfolios to deal with the unexpected, including inflation and market volatility.
Yeah, so let's start with inflation. A lot of people think as they get towards retirement, man, I need to move everything to safe. And so they're earning significantly lower because they don't want to take risk. But with inflation, the thing that keeps up the best with it is high growth stock equity positions.
Yeah.
So you are always going to need, in our opinion, a bucket of that growth stuff to keep up with inflation. And then on the volatility side, the market goes up, the market goes down. We build specific portfolios that are designed to, one, protect against that volatility, but also to try to make changes when the time is right to capture some of that and actually improve your situation.
Right. Yeah, I know you build that into the portfolios. Another regret, not considering tax implications, especially if the bulk of our savings is in a 401k or other tax deferred account.
Sure. So the generation before ours, they were told save in a 401k, put all this money in there pre-tax, you'll retire, be in this low tax bracket, and everything's going to be great. Well, that actually hasn't quite worked out. And so we've told people we are not tax preparers, we are absolutely tax planners, because you need a way to account for this. If you've got $1 million in the 401k, then how are you going to manage those taxes in the best way possible? And so once again, a very normal regret, but there's things you can do to improve your situation, because we always tell people you don't want to pay Uncle Sam any more than you absolutely have to.
Right, absolutely. One investor shared his experience of putting his retirement funds in a robo-advised portfolio, which had 20% in mortgage-backed securities, among other poorly performing sectors. His regret was not working with a professional.
I believe it. So a lot of those robo-advisors, target date funds, they're all very similar. They look at two factors. So they want to know what's your current age and when do you want to retire, and then boom, it kicks out an answer. So that is not the way to go about it. So the number one thing I talk about in our first meeting, Kim, is the exact same. What are your goals? What are your concerns? Because you need a custom plan that builds that stuff in. You can't tell the robot what keeps you up at night. It's just math kicking out a number. The other thing I will say about that is I almost always move clients out of target date funds that are in their 401ks. Usually they're a little more high risk than people understand. And then they also tilted very heavily towards international. So however these big shops are coming up with their algorithms, we normally tend to be a little bit different in our approach.
Right, as you should be. Well, Brent, if somebody would like to talk through maybe some of these regrets and how they can counter them now, what's the best way to reach you with questions?
614-430-8383 or go to young-wm.com. It's never too early. It's never too late. So come in and see us.
Brent, thank you.
Thank you.